Welcome to the Final Bar. I am Greg Schnell, the host of the show. This is the show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out the inflection points for minimum risk and maximum reward. And we have lots to cover today. Market had a big rally yesterday, so I want to talk, today's agenda is going to be just simply if the market's starting to rally, what to do. And I've been talking about getting ready for the rally for the last couple of weeks, so I want to make sure that everybody's got some methodologies to do that. So first of all, just an index discussion why I think the market's trying to rally, and it's going to be difficult, but that's our job, is to trade the market we're given. And then we're going to look at the perf chart and just see some of the different sector performances, and then we're going to get into 3 different scan ideas to help us find value as we're going forward. So hopefully with all of that, that'll give you some tools to get ready for this rally. So the first thing I want to talk about is, let's just go to the sector summary, and I'm recording this while the market is closed, or it's just before the market's about to open today, so it's about 7:15 a.m. where I am. But this is the sector performance over the last week, and you can see discretionary commercial services have really done well, and over here on the right hand side, healthcare, which is quite frankly biotech, is the big surge in here, and financials are fine, but you can see materials and energy still haven't enjoyed any sort of real rally yet. So continue to watch those, but the defensives have also done okay. This energy one is quite ominous, because of course if we just roll this out to 3 weeks, energy's been really ugly, and the defensives have been very strong. So anyway, what we want to focus on is on the left-hand side, some of these more growth-oriented groups, and as they're going to come back. So let's talk about how to do that. Oh, so actually, before we do that, let me get into why I think we're rallying. So this is just the S&P 500 on a 10-minute chart, going back from November 7th to 29th. And in general, you could just see this black line was pretty much friction. Now it seems support. We had the big surge yesterday as Jay Powell was speaking, and then the market took off to the upside. If we go down to the daily view, this gets more important, because what we're seeing here is this higher low in momentum. And if we zoom in on the price action here, we can see that this point right here was the lowest close on the previous dip down on October 29th, and then here we have 2 lower closes below this point, maybe only 1. But the bottom line is you have a lower price, but you have a much higher momentum. So that's what we call positive divergence, and you're looking for that. So the momentum to improve on the secondary low. And we can go to a lot of charts like Amazon or whatever, and try to see positive divergence setting up on individual stocks. It's not just on the indexes itself, but what we want to do with that information is that tells us to get ready for the rally. And so here we have the weekly chart, and we can all see this pretty much defined level now of 2600, and very, very important. And if that didn't hold, then we'd probably expect the market to move down lower. Now, just the time here is one thing to talk about. So we've been down for about 8 weeks since the end of September. And if we go back here, this was whatever, down to this low was 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. So we're in about the same sort of time frame. Now, one of the things that's interesting here is just looking, it took another 3 or 4 weeks before the market really started to turn up. I'm actually expecting it to go up relatively quickly, and then we'll see where we stall. But we'll talk about that a little bit more coming up. Now, this is the point and figure chart for the S&P 500, and what you notice is a series of rising lows here. So, if we're going to start breaking that series of rising lows, then that would be big. We still have our major uptrend on a point and figure chart. This is automatic. It basically puts it at a 45-degree angle off the last major low and goes up. And you can see coming into 2016, we had this uptrend, and then it broke. And once this goes past here, all of a sudden this puts this red line on, and that's a bear market. So then we're headed down, and we don't know how far down. Is it going to be 20% or all of that sort of discussion? It's not a percentage thing. It's just that we've broken the uptrend, and now we're in a downtrend. So that's fine. So then we're down here for a little bit, and we finally break out of this area back in 2016. And when we go back above this red line, now we draw this blue line, or the computer automatically draws this blue line, and we've been staying well above that for a while now. So we also have a trend line that we could draw under here, but the bottom line is for the S&P in general, you're just going to use these big major auto trend lines, and it gives us a general idea. Now, the one thing that I think is important, I just want to show this briefly, is if you go to the NASDAQ, okay, and we go to the daily chart, what we see here is the relative strength made a just slightly higher low, but we can see price made a significantly different lower low, and it's that difference that even though this is significantly lower and this is relatively flat, we still have divergence because we don't see the price continuing to make excuse me, lower lows while we don't see the momentum indicator making lower lows while the price is making lower lows. So the fact that it's stalled here at a higher level is good. Okay, now we go down to the weekly chart, and you can see that the PPO is below zero, and that's not usually a bullish thing. The point I want to make is back here it was the first dip below that was kind of cautionary, and then you had the rally up, and you don't know if the rally is going to be a week or two or a month, or you just don't know. So anyway, so we've got this dip down below, and now we want to watch for a rally coming out of that hole. But if we look at the point and figure chart, the perspective I want you to see is that we're very close to this long-term uptrend line. And so this, as we make X's and O's, these columns, this just gets slowly stretched out. So it's not really a time scale. It's more about how many oscillations the market ends up having. And we get over to this 45-degree area. But the bottom line is, we could see this support sitting in here on the NASDAQ, a little bit lower, 6175, 6300, and 6500 right now. So with all of those levels, we're getting to the point where we're starting to make this, what would be right shoulder on here, and when we do that, we'd also break this trend line. So let's keep watching for that over time. That's one of the things that'll be important. Okay, so in general, just as the market is setting up in the morning, the way you get to that gallery view, just in case you didn't know, you can just click on this chart, and that brings up a gallery view. Now I've customized my gallery view, but you could get the default, so that would be fine. Okay, now what I want to do is I just want to go back onto the main page here and just show 3 different scans. And you don't have to use my scans. The idea is just, you need to scan for something, and what are you scanning for? Well, what I like to scan for, and let's just edit this so you can see what the scan components are. Custom scans, yeah, there we go. Okay, so I need to select my scan, monthly breakout USO or USA, and I want to edit it. And the country is US, type is stock. The volume, we just wanted to have at least 300,000 shares a day. And this month's high is greater than last month's maximum high or any time in the last 12 months, and the close is greater than $5. Very simple scan, nothing too revolutionary about that. But what we're looking for is, while the overall market was down, we're looking for something that was making new highs. And so we can run that scan, and when we run that, it's going to create a result for us, and this gets put into a chart list. Now, we can't do anything with this. I mean, we could sort it briefly, but we can't really manipulate it. So what we want to do So I'm going to set it up here. So I want the SCTRs declining, not increasing. So you can see this little table here reversed, and now I've got the strong stuff at the top, and then I want to click on sector so that it's sorted by, at least by sector, and I could do by industry if I wanted to, but for now we're going to do sector and scooter ranking. And so then we're going to replace an existing chart list with these results. And I have a whole bunch of scan lists. And today we're going to use whatever, pick one. Here's one called Dire Straits scan list. And I want to preserve the sort order. So you'll see here there's no numbers out in front of these names. But if I click on preserve sort order, and when it saves it into that chart list, it's going to maintain this sort that I've got already set up. So I could do this after. It's just as easy to do it before. So anyway, this is the these are all ETFs up here at the top, and you can see they're sorted by that. But as we go down to the sectors, here's all of the different sectors that have had you know, new highs in October. And so let's just scroll down here. What I want to show you is here's energy with nothing going on, and yet, you know, here's consumer discretionary with some really good names that have done very, very well. You know, maybe it's Live Nation or whatever. That chart looks pretty good. Here's AutoZone Nevada. That chart looks very good. AutoZone in general, and we see Advanced Auto Parts is on this list as well. So anyway, as we go through here, you'll notice there's some trends, and here's Starbucks after that big move, and then Sleep Number Corporation, that chart's trying to break out to new 52-week highs. So all of this is just helping us look, and I wrote an article about TripAdvisor. It's on this list as well. But as we go through these, the idea being you just want to find out what stocks we're doing, and even if you just took a simple look and tried to figure out what was the best sector to be in, based on the number of stocks in the sector. And here's healthcare, and you can see lots of different names are flying here. Here's Emergent Biosolutions. You know, beautiful chart. Was 50 bucks, now 70 bucks. 3 months ago it was 50 bucks. So the chart's obviously on the move, and you know, you're probably not looking to find something that's already moved that much. You'd rather find something that's been more consolidating, as this chart has, and it's starting to break out to new highs, because that way you can define your risk a little better. And just you know, looking through these, you can either look here, or we can go to the 10 per page view and just walk through them. So I don't really want to look at a whole bunch of ETFs. Perhaps you do, that's fine. But whatever, we'll just step through a few charts here and get into some lists. So here's, these are the consumer stocks, communication stocks. And here's Planet Fitness, so let's just click on this chart. And of course, once you've got it in a chart list, then you can do whatever you want with it. So this chart is just trying to break out through new 52-week highs, had a really nice day today, and after consolidating 4 months, that's the type of setup you're looking for, is something that is literally just getting going. And if we go to the weekly chart on here, what we're going to see on this chart is that, you know, the PPO has been very, very strong for a while. The stock is now consolidated for 4 months, and it looks like it wants to break out to new highs, kind of like it did back here. And so this is a pretty easy decision to try and look at a nice chart and say, where would I like to get in? And it's somewhere right around here at 55 bucks. And if it keeps going, great. And if it doesn't keep going, well, obviously it wants to consolidate a lot more. So you'll just sell it to somebody else and move along and pick a different stock. But I think in general, the chart looks very good. Your PPO is still nice and strong. It has made a lower low, which is a little bit cautionary, but I think the overall market probably has more work to do. So anyway, over time, I think we're building a kind of a major top, and I've mentioned that already. Did a big article on it in early October. So here we are. This is trying to get back above its signal line, and as it turns up here, this is a, obviously a good place to get on board, and we like the stock, and we would set our stop really just below the breakout level. So the stock's currently 56.75. Standing back, let's not be too aggressive, but something like $53 if it got down there. Isn't really doing what we expected it to do, so that would be a better place to leave. We wouldn't want the full stochastic to roll over near 80. We want it to keep going all the way to the top. So that's the type of scan that you can easily run. So again, let's go back and talk about the components of that scan. We're just looking for this month's high. There was a high somewhere in this month, in November, that was greater than the last month's maximum for the last 12 months. So the preceding 12 months, we have no price point high, not close, high, that has been up here. And in the month of November, we exceeded that high. And you can do this at any time, but it works great at the end of the month because you can see what's been happening for a whole month at a time, whereas if I did it on December the 1st, then I'm only going to get the 1 day of data. So and again, pick your $5, $10. You can decide you want stocks with 1 million shares traded, whatever. The whole goal here is just to find a quick scan to see what was good in November, and the odds are if it outperformed in November, it was probably a pretty strong stock because the overall market was pretty weak. Okay, so anyway, we talked about Planet Fitness. Now we want to go on and we want to look at a different scan again, and this scan is performance from a previous date. And what we could do here is we could just say, I want to find some stuff that's in an uptrend. So I want to look for something that's already been rallying. And so here would be an example. And if you wanted to do it from a list, so let's say whatever, gold miners or something, but we could go down here and we could pick different indexes or whatever. We can also pick existing chart lists. And so in this chart list, whatever, let's scroll down and find something. Here's biotech and pharma, and whatever, list 160 or list 276, it doesn't matter. These numbers are automated, so we don't get to pick them. Anyway, go grab this biotech and pharma list, and we're going to add it. And we're going to sort through that list. So I want to take it and I want to move it to the top and put it up here. And because I don't have slashes in the front, it's going to process this line. And this line that I've got up here with gold miners, it's not going to protest, or it's not going to process because it has these slashes. So it's not going to look at favorites list 24, but it is going to look at the favorites list 276. And these two slashes here just say it's my biotech and pharma list. And I want a volume of stocks greater than 200. We probably want 200,000, and close greater than $10. So this, I put these in here just to describe what's happening on the next line. So the daily simple moving average of the close has been, for a 60-day period or 3 months, has been greater than $10. And now we want to look at the price performance. And so on this, the close is greater than or equal to the 30-day close greater than 30%. So it's really been in an uptrend, but less than 40%. We can do whatever we want to do here. So whatever, let's just say we want stocks that are up 10% from 30 days ago, but no more than whatever, 25%, just to pick some numbers. And then money flow is improving. All of a sudden this thing is starting to improve. Okay, so we run that scan, and very simply it's going to generate 9. Now we could go back and say, well, that's too few, and so I would like a little bit more. I would like to see a little bit different number of results. So whatever, we can loosen this up to be, just has to be better than, it has to be up from 30 days ago. And 30 days ago would be roughly a month and a half, so mid-October. And we could do, 40 days ago, just to pick the end of September roughly. And so it has to be up between something between very little to 25% since the end of September, and we run that scan, and sorry, it's coming in on this one, and now we've got 36. Okay, so let's just take this, and this 36% here, or 36 stocks, we want to sort them by scooter ranking, and we want to replace an existing chart list. And so let's go down here, my chart list, let's just go scanning whatever George, we'll dump it in there, and we want to preserve the sort order because we've put it by scooter ranking. And by doing that, so we click on this button and then hit OK, and now we're saving it on that basis. So if we just take this quick look, and the market is open now, so we've got today's, but what we really want to know is, you know, here's a 3-month version, what's really been rocking, and let's sort it by percent change. And now we can just literally highlight these. That one looks pretty nice, breaking out of a nice base there. This one's way too choppy for me. Genomic Health, that one's had a nice pullback, pretty much to support at $70 level there. And again, we can go look at these. We can resort them, or we can leave them in the sort order I had, which was based on scooter. And in order to resort them, we're just going to click on the edit button. We want to get rid of these numbers at the front, so we're just going to check them all. And we go down here to the bottom of the page and remove numbers from, and click OK. And then the next thing we want to do is go back to summary mode so that we can set whatever sort order we want. And if we just want to look at what's had the biggest change, again, over a 3-month period, we can go do that. And now we can hit that as our sort order. And so we scroll to the bottom of the page again and hit number in sorted order. And it'll put it together for us. And now we can just, you know, go view 10 per page. So I'm just trying to give you some ideas. These don't have to be the trade you do or whatever. My point is just showing you how to run scans, get them set up, work with them, and find this data. Now here's one, Axia Therapeutics, not sure even how to say that. Real roughly, $32 has been a pretty interesting place on the chart. This looks like it wants to try and go higher. You know, it's already been running for a bit, so maybe you're just waiting for a couple of day pullback or something like this. And when you get that couple of days, then you probably look to get involved. Now here's Genomic Health. There's that $70 level. We'd like to kind of see the stock hold here, but it looks like it's just starting to get going, so this is a nice place. Ionis, this is a really nice base. It's breaking out of pretty much a 1-year base. And again, you know, go and look at it on a 5-year basis and just see if you still like the chart. So here's the 5-year. Yeah, everything, PPO is just turning positive. This thing had a nice wave pullback, and it looks like it's starting to work its way higher. It does have long-term kind of ceiling so far, but you know, if it was going to get going, that's great. And we see this purple area here. This is the relative strength starting to improve, so it's outperforming. And if we look back here, basically almost to the beginning of last year, so this is almost hitting new 12-month relative strength, which is a really positive thing. Okay, so I've described that. Now the next thing we want to do, and this one's very simple, is we just want to go look at the relative strength for the S&P 500. So what I've done is I've set up a chart as a performance chart, and the way you do that is put in the word performance here. And I made it a line chart, right? And then here's 3 months, and we just want to see what the S&P has done for the last 3 months. And if you use the SPY, it includes dividends. But basically, it's been down 5% over the last 3 months. So from this date, and it's down. So what we want to find is something that's outperforming the S&P 500. So we want to go look at a simple thing to do, and obviously the S&P 500 is the average of 500 stocks, how they're performing. So if we just sorted based on looking over a 3-month period, we'd probably get at least 250 if we said we only wanted to look at the components of the S&P 500. So what I would recommend is go pick some sort of a group, and again, you could do some chart list you have, or you could say the group is in the communication services sector, and the way you would have done that is you go in here. and pick one of these groups. And here's communication services, direct sector, the new one, and you could just pick what you want to work through and whatever. I'm going to pick the whole group because I just want to see what's working there, and we would add that up here, and I've already put it in. And so if I put these two hash marks in front, or sorry, slash marks in front, then it's not going to perform that part of the calculation. If I take it out, it will. So it's going to look at the communication services sector, and it's going to try and find a daily volume, whatever. Let's pick it up to 200,000, and we want to close greater than $2. Pick a number. And what we know is that 60 days ago the S&P was down 5%. So we want to say if the close is greater than what it was 60 days ago by only 0.95, then it would have outperformed. And we probably want to say, and the close from 30 days ago is greater than 120, is less than 120. So what we're saying is we don't want something that's kind of blown off the roof. And then we run our scan, and we're going to get a scan result. And so here's 81 numbers. And with this 81, now we need to put it in some sort of a chart list. Again, I'm just going to replace an existing chart list. These are just scan chart engine spots I've got set up. So we're going to go pick whatever, scanning John, and click OK. And now what that's going to do for us, if we just click on one of these charts, in my default chart style, I always have relative strength. And what we see is this purple area is called relative strength. And what we're looking for is something that's been outperforming the S&P 500 for the past 60 days. So 60 trading days is roughly from August. So we know the S&P was down 5%. So if this is flat from that period or down slightly, it's still going to come up in this scan. And so with that information, yeah, this has been consolidating sideways. It's right at support, call it $5. If $5 holds, you might still want to own it. If it loses $5, I'd probably let somebody else own it and just move along to my next stock. Now, again, I'm just going to go pick at random rather than try to have the perfect chart list here. Just want to show you some simple ideas to get you going. But you can see the relative strength was declining all through here, and over the last 3 months, so basically from this point, end of August to now, yeah, it's outperformed the S&P 500, and sure enough, we find the price was back around $20, and now it's at around 22. So even while the S&P is still down 5%, this is up roughly 10%. So here's something that's outperforming. Lots of different ideas for scanning. My idea is not to try and force these scans on you. The biggest idea would be to just take a screen print and from the video and take those, make some scans, whatever you want to do with them. You can scan for something that's very underperforming and use that information as well. So hopefully I've given you some things to work with. If the market's going to rally from here, we want to be on board. And how do we want to do that? Let's find stocks that are either outperforming or starting to outperform, so their relative strength was declining and is now improving. So lots of things we can look for. Anyway, thanks for joining us on today's show. The Final Bar airs live on Thursdays at 5 p.m. Eastern. It can also be found on the StockCharts TV schedule at other times during the week. In addition, you can look for it on the StockCharts YouTube channel. With that, have a great weekend and good trading.